My name is Will Duff-Gordon and I bring you the Data Explorers daily stock lending briefing. Firstly, a snippet of regulatory news. Giovanni Spagnuolo has been fined $10,000 by the Australian Securities and Investment Commission on 5 charges of naked short selling. Spagnuolo was the second person to be charged with short selling provisions under the Corporations Act. The Commission proved that he applied for shares and options in capital raisings by companies including Rimfire Mining and QR Science Holdings, and before these shares were issued, he agreed to sell them on the stock exchange and of course failed to deliver the shares and options for settlement on the due date. Goldman Sachs has an earnings release this morning, so today we're going to talk about this stock and 3 other investment banks, Morgan Stanley, Credit Suisse and UBS. These stocks could well have an impact upon Christmas spending, given the pressure on bonuses being large this year, and this might reduce spending across global capitals. So starting with the most shorted of the companies mentioned, Morgan Stanley has 3.3% of its shares outstanding on loan, but that's down from 7.5% in July. Utilization is 18% of available shares and has doubled over the last 6 weeks. The company's share price, meanwhile, has fallen from $45 in August to $12 now, but was largely unchanged in the most recent trading session on Friday. Goldman, which has just under 2% of its shares outstanding on loan, which is down from 10% in the summer, an all-time high for the bank, is not particularly shorted according to our data. The spike in borrowing in Goldman in the summer was mainly down to pre-borrowing after the rule change in July by the SEC. Utilization is at 7%, but interestingly, shorting in Goldman doubled in early November as the price dipped below $60, and then people covered it as it climbed off its low. The share price has fallen from $250 in July to $71 now, and it was down over 3% in late trading on Friday. So moving on to the Swiss investment banks, Credit Suisse has 2.7% of its shares outstanding on loan, which is down from 4% in June. Utilization is only 10%, and the company's share price has halved in value from nearly 60 Swiss francs in September to 30 now. Interestingly, on Friday, the shares were down 4.5%, close to the close. Finally, UBS has seen relatively little activity recently, with its shares outstanding on borrow at 1.4%, a figure that has remained virtually the same for the past 3 months. There was a big spike up in June, however, from 3% to nearly 10% in the space of 4 weeks. That then came down as rapidly as it increased. The bank share price has fallen from 50 Swiss francs to 15 in the last year, and it was down as much as 8% during trading on Friday. So to recap, investors on the short side trading these investment banks are positioned in anticipation of further falls from Morgan Stanley and Credit Suisse. Time will tell if this proves profitable. This is Will Duff-Gordon for Data Explorers in New York.